Hi everyone. Hopefully you're having a great day today. So what happens when you convert a mortgage into a first lien position, which means you're replacing a mortgage with a line of credit. So if I had a mortgage of $100,000 and I replaced it with a line of credit of $100,000, then that puts it in the first lien position. The mortgage is eliminated and I have a line of credit that's working through, but that line of credit is also still tied to the home itself. So welcome. My name is Will. I'm a political economist and I'm using velocity banking to generate wealth and to pass it on to future generations, or attempting to in terms of how I operate. So one of the things that I did was convert two mortgages to a line of credit, one for I think about 40,000 and another for about 50,000. And now they are lines of credit. As a result of converting those mortgages to a line of credit, is now my responsibility to pay the escrows, or what is the taxes and insurance. So rather than having a mortgage of say $1,000 and 400 a month is goes toward taxes and insurance, that money now sits in my line of credit and pays down the principal on those two mortgages. Oh, those two lines of credit. So let's go ahead and get started, and I'll show you where I just made a payment in general. All right, so here we have, go back to the first slide. Sorry about that. Okay, so again, as I indicated, I'm a political economist using velocity banking in general in my life. What I've done was replace my mortgages with lines of credit, and now it's my responsibility to pay the escrows. Velocity banking for me is a method of using cash flow or discretionary income to pay off debt through a line of credit or someone else's money as a strategy to reduce debt, loans, bills, mortgages, credit cards, student loans to build wealth. Now, that's just my definition. Now, in the traditional banking, before I found velocity banking, I was getting my paycheck, put it into the bank, paying down debt, and whatever was left remained in the bank in a checking account, generating some income. With velocity banking, what I do now is pick up my paycheck from my employer, put it into a bank, then I immediately take my paycheck and put on what some have called a debt destroyer or debt tool. In this case, I'm using a Wells Fargo credit card that has a limit of 7,500, and I'm running all my bills through that. What I do is make all my purchases on that one card as much as I can, particularly groceries, shopping, eating out, traveling, and things of that nature, but to pay down the debt. Then I pay off the credit card the next month. I do not pay off the credit card during the month that I made the charges. I let that sit to allow the money in the line of credit to stay there just a little bit longer. And here you can see where I will be making or have made two payments on the credit card, the Wells Fargo, that has a limit of 7,500. So today, the taxes on it was $4,035.98. And the taxes for the properties that I purchased in 2008, 2005 during the last capitalist crash in Georgia, they're up a little over 400 to 450%. So when you get a chance, look at your taxes and see if they've increased since a period of time. But for me, about 400 to 450%. So we got 435, and there was a processing fee of $80.32. And last month with this card, I got back about $142 in cash back. So that's helping to offset some of this fee next month. Now, this is the second property that also converted from a mortgage to a line of credit and is my responsibilities for the escrow. So that's another $3,378.90 plus a $67.24 processing fee. So today the credit card was $562.44. I had to remember, I paid that credit card off last month to a balance of zero. So I was over 62.44. But before it hits tonight, I'm gonna put in another 100 to cover that overage. But again, it is my responsibility now since I've converted my mortgages to lines of credit and the escrows that I was paying monthly, about 400 each, so that's $800 a month that stays inside of the line of credit and pays it down. 800 times 12, so that's $9,600 a month that should be sitting in the line of credit, paying it down. All right, what happens next? Since doing this strategy, my credit score has gone up. This is an old credit score, but I got up to 800. Then I took out some additional 0% credit cards and lost like 130, between 110 to 130 some points. So it's coming back up slowly. All right. So I just wanted to come on here and let you know how I'm doing velocity banking. I've replaced two mortgages with lines of credit. The escrow I'm leaving inside the lines of credit and pay them off once the bill comes due. If you'd like to work with me or my team and learning more about velocity banking and how I can help you with being an authorized user, velocity banking, budgeted, so many other things that we can work together. Look forward to working with you. Please give me a call. Have a great day, everyone. Bye bye.